Hello, welcome to the Finshares stock market lesson series. Today we are going to talk about dividends. Yes, so what's dividend? I know you cannot hear about the stock market or public listed companies and you don't hear about dividends. So what is it? Dividend is an income paid to shareholders. If you own shares in a company and the company makes profits, they can decide to pay you a certain percentage of those profits in terms of dividends. Some companies pay dividends, others don't pay dividends. For example, here in Uganda, companies that pay dividends, we have Umeme, we have Stanbic Bank, we have Bank of Baroda, and we have Uganda Clays. However, there are companies that also don't pay, but these can decide to pay later the dividends. Here in Uganda, most of the companies usually pay annually. However, of recent MTN is planning to be paying quarterly dividends, and we have no company that pays monthly. Yes, most times when you go to watch news, you find that analysts are talking about good companies for shareholders, and these good companies, these are companies that pay dividends. Seriously, why should you buy shares from companies that don't pay dividends? Yet there are those that actually pay you dividends. And most times when these companies have made a lot of profits and decide they have paid off their debt, so after paying off their debt, they remain with these choices. They can reinvest this money to expand their product. They can sit on that income to build on the reserves, or they can pay that income to you as a dividend to its shareholders, or they can decide to buy back their shares. Yes, so for people who are mature and approaching retirement, these dividend paying companies are good because they'll be a source of their income during their retirement, and these companies can be easily passed down to their children. And for example, the dividend paying companies are also less volatile, because seriously, if a company is paying you dividend, why would you want to sell it off easily? So you find most people don't deal in the buying and selling of shares of most dividend paying companies, so they become less volatile. However, for the flip side is that when these companies decide not to pay these dividends, the share prices reduce and people get a lot of loss in capital gains. However, for young investors, you should look at companies that are paying dividends and are also growing, because for them they have that time of growing those companies, and if they are getting those dividends as they are growing, it can be nice. And they should also look at undervalued companies. These undervalued companies, for example, Bank of Baroda. When I talk about undervalued, it means you can buy the share price, the value of the company is worth more than what people think is. And also, young investors are encouraged to buy shares from companies that do share buybacks, because this shows a muscle that they believe in their company, and they have solution for the potential challenges that are coming ahead. And also the share price will increase, because by the time a company believes in its shares, of course it will be a sign to other investors that you can actually buy in us, so the share price will increase. Yes, that has been for today. Mainly that's what dividends is all about. Yeah, so next time when you hear the word dividends, you can really instigate what it means. Thank you for today.